Welcome back. The S&P 500 and Nasdaq both closed at fresh all-time highs today. The S&P 500 finished at 7,563, up 0.58%. The Nasdaq hit 26,917, up 0.91%. The Dow slipped 0.08% to 50,606, held back by industrial names. PCE inflation came in this morning at 3.8% headline and 3.3% core. In line but sticky. The market absorbed it. Iran's ceasefire extension rumors gave risk appetite a lift in the afternoon. But the real story started after the closing bell. 4 major companies reported tonight: Dell Technologies, Costco, MongoDB, and Okta. The results tell a coherent story about where this market is heading, and it is not what most retail traders expect. I am Daniel Reed. This is Market Lens. Let us get into the data. Let me start with Dell, because this is the single most important earnings report of the week for the AI thesis. Dell reported revenue of $43.84 billion. Let me put that number in context. Analysts expected $35.4 billion. Dell beat by $8.4 billion. That is a 24% beat. Revenue grew 88% year over year, the fastest growth rate since the company returned to public markets in 2018. Non-GAAP earnings per share came in at $4.86. The street expected $2.94, a 65% beat. GAAP EPS was $5.24, up 282% year over year. The Infrastructure Solutions Group, Dell's data center business, generated $29 billion in revenue, up 181%. AI-optimized server revenue alone hit $16.1 billion, up 757% from a year ago. They booked $24.4 billion in new AI orders during the quarter. Traditional server and networking revenue also grew 92%. Storage grew 8%. The Client Solutions Group, PCs and laptops, grew 17% to $14.6 billion. Every segment is accelerating. Cash flow from operations hit $4.1 billion, a first-quarter record. Operating income more than tripled to $3.7 billion. And then, Dell raised guidance in a way that confirms the AI build-out is nowhere near peaking. For Q2, Dell expects revenue between $44 and $45 billion and non-GAAP EPS of $4.80. Analysts were at $2.98 for EPS and $35 billion for revenue. Dell is guiding 60% above the street on earnings and 27% above on revenue. For the full fiscal year 2027, Dell raised its revenue outlook to $165 to $169 billion, up from the prior range of $138 to $142 billion. The midpoint implies 47% annual growth. Full-year AI-optimized server revenue is now expected to be roughly $60 billion, up from $50 billion previously. That is 144% growth. CEO Jeff Clarke said, and I quote, "We booked $24.4 billion in AI orders and recognized $16.1 billion of AI server revenue. We are increasing our AI server revenue expectations for FY27 to $60 billion, which only goes to show the AI opportunity shows no signs of slowing." Dell stock surged 13% in after-hours trading. Now let me tell you what this means beyond the headline number. Dell just validated 3 things at once. First, that the AI server build-out is accelerating, not plateauing. The 757% growth in AI servers and the $60 billion full-year guide are real, booked numbers, not pipeline talk. Second, that the AI demand is broadening beyond just the largest hyperscalers. Traditional servers grew 92%, which means enterprise customers are upgrading infrastructure alongside the AI push. Third, that margins in the AI server business are improving. The $4.86 EPS on $43.8 billion in revenue implies margins that surprised even the bulls. This is Dell's moment. The company has fully converted from a PC turnaround story into the defining AI infrastructure bellwether. Now let me cover the other 3 reports because they reinforce a consistent narrative. Costco reported fiscal Q3 results. Revenue came in at $69.15 billion, up 12% year over year, beating estimates. Earnings per share of $4.93 edged past the $4.92 consensus. Same-store sales grew 9.8% globally, 9.4% in the US, 10.7% in Canada, and 11.2% internationally. Digital sales surged 21.5%. Net income rose to $2.19 billion from $1.90 billion a year ago. Membership renewal rates remain above 90%. Costco is a direct read on the American consumer, and the message is clear. Consumers are still spending, but they are trading down to value. Costco's warehouse model benefits directly from inflation-wary shoppers looking for bulk pricing. The stock gained about 2% after hours. MongoDB reported a strong quarter. Revenue hit $687.6 million, up 25% year-over-year, beating the $664.5 million consensus. Non-GAAP EPS of $1.32 beat the $1.18 estimate. Remaining performance obligations hit $1.46 billion, up 88%. MongoDB raised its full-year revenue guidance to $2.92 to $2.96 billion. MongoDB and Snowflake share a critical characteristic. They are consumption-based data platforms. MongoDB's Atlas business grew alongside the Snowflake trend we discussed earlier this week. The stock gained 3.5% in after-hours trading. Okta reported revenue of $765 million, up 11%. RPO grew 16% to $4.72 billion. Free cash flow was $271 million, a 35% margin. The company guided Q2 revenue of $790 to $794 million. The stock was modestly higher. Okta's results are solid but not spectacular. The identity security space is steady. The market accepted the numbers without much drama. Taken together, these four reports tell us the following. Dell confirms the AI infrastructure boom is accelerating and broadening. Costco confirms the consumer is resilient but value-conscious. MongoDB confirms consumption-based data platforms are in a multi-year growth cycle. Okta confirms enterprise IT spending is stable. Now let me give you the framework going forward. First, Dell's 13% after-hours surge is significant because it breaks the sell-the-news pattern we saw with Marvell last night. Marvell beat and raised and fell 3.5% because it was up 130% year-to-date. Dell was also up 136% year-to-date entering tonight. But Dell delivered such a massive beat, 65% above EPS estimates, that the market had no choice but to re-rate it higher. The difference is the magnitude of the surprise. Second, the AI infrastructure trade now has 4 confirmations in the past 2 weeks. NVIDIA guided $91 billion. Marvell raised guidance by billions. Snowflake showed AI workload monetization with a 38% surge. And now Dell shows AI server demand at 757% growth, with a raised $60 billion guide for the year. The weight of evidence is overwhelming. The AI CapEx cycle is accelerating. Third, the setup for June is becoming clearer. The PCE report keeps the Fed on hold. Earnings are confirming the AI thesis. The Iran situation is unresolved, but the market is learning to trade through the headlines. The path of least resistance remains higher for the indexes, but individual stock selection is critical. Here are the actionable takeaways. If you are long the AI infrastructure theme, Dell's report is your confirmation. The server, chip, and data center build-out is real and accelerating. But be aware of entry points. Dell and Marvell have both rallied 130% plus year-to-date. The fundamental stories are intact, but pullbacks are healthy. If you are looking for exposure to the consumer, Costco is the cleanest read. The trade-down trade is working. Defensive retail with pricing power continues to outperform. If you are watching the software space, the MongoDB and Snowflake data points suggest consumption-based models are the only ones being rewarded. Subscription software continues to face multiple compression. The indices closed at records today. Dell confirmed the AI thesis. Consumer spending is slowing but not collapsing. The Fed is on hold. The data is consistent. The market is rational. And the AI infrastructure trade has further to run. Keep your data sharp and your logic sharper.